Wednesday the 21st, welcome back to Future Money. I'm your host, Armando Pantoja, futurist, investor, and creator of multiple tech exits. Every Monday and Wednesday, I take you inside the trends that will shape the next decade of wealth, from crypto to tech stocks, emerging technology. Future Money is all about clarity, timing, and strategy. I break down what's coming, why it matters, how to stay ahead and build wealth in a fast-changing world. Whether you're just starting out or looking to sharpen your skills and knowledge, I give you the mindset and the tools to thrive in tomorrow's markets. Now, we got a lot to talk about today. Some pretty big things are happening. XRP right now is battling Circle. XRP right now is attempting to buy Circle, which also owns one of the biggest stable coins in the world, which could significantly impact both Ripple's corporate value and also XRP's value. A lot of rumors that they could possibly combine RLUSD and this coin if they're able to acquire that company. Ethereum is doing a lot of great things. A lot of institutions, banks, and elite are now starting to pay attention, waking up after 4 years of silence. Many analysts now are talking about going to 10,000. There's even renewed talks of Ethereum flipping Bitcoin as the #1 crypto in the world. Now, I've been saying this for years. Over the time, sometimes I've looked like a genius saying it. Other times I've looked like an idiot, depending on where Ethereum was in relation to the overall market. But now these things are starting to come to pass. And we'll also discuss Amazon and its potential to double its stock price soon based on some things they're working on. So let's get into it. So the biggest thing I want to talk about is Ripple and Coinbase. The biggest thing I really want to talk about. Now let's go back. Let's talk about first where the Bitcoin price is today, where it is right now.
Let's take a look at Bitcoin. Bitcoin today is trading at $107,000, up nearly 2% today. It dipped just below $105,000, but it rebounded quickly and touched almost $108,000 before pulling back. This move shows solid confidence in the market plus ongoing momentum for the world's top cryptocurrency. Remember, Bitcoin, as of now, is the barometer for the crypto world.
So we always talk about Bitcoin because Bitcoin is the barometer, more or less, of the market. But the second biggest news I want to make sure we talk about this is Ripple and Coinbase are locked in a high-stake contest right now to acquire Circle. Now, the reason why XRP wants to acquire Circle is because Circle is the issuer of USDC, the second biggest stablecoin in the world. Now, Ripple has offered $5 billion to buy Circle already, and it was rejected because they're both fighting over it. Coinbase is also fighting for it because Circle owns that big stablecoin. And that's whoever owns that stablecoin has a lot of power. They also have a lot of cash flow, liquidity, and you can do a lot of things with both of those things under your corporate structure or umbrella. So there's rumors out there that said that Coinbase may have offered $11 billion. Coinbase may have offered $9 billion. So the other rumor says, now this is not confirmed, but they say that XRP could have increased that offer to $11 billion. Now what they did is they took that $5 billion from the beginning, added a little bit of cash to it, and also offered XRP. Now this acquisition, that's actually a brilliant move because, Ripple owns roughly 30, 40, 50% of all XRP in existence. They keep it in their corporate structure, coffers. So, but the exciting thing about all of this is that this acquisition could reshape the entire stablecoin market and make Ripple the center of all stablecoins. And in turn, it can influence the whole crypto market. This is some big news if XRP is able to acquire Circle. It's some of the biggest news I've heard in crypto in years. And because there's not a lot of retail attention on cryptocurrency right now, nobody's really talking about it. Even if you go on Google Trends right now, you see that there's a very, very low search. There's not a lot of searches about XRP or even crypto or Bitcoin in general, because when the masses come, it's normally too late. These things happen during accumulation phase before the masses get in. So 3, 4, 5 months from now, when the masses come in, that's when we're going to see all of the attention, all of the media attention, and all of the unsavvy investors come to the market. We're going to see exponential growth in all of these coins. But the reason why the value of all that is getting built right now before the masses come in. So like I said before, is that Ripple had to increase their $5 billion offer. A lot of reports saying they raised it to $11 billion, both cash and XRP. Coinbase is fighting right back, it's almost a bidding war for this because whoever owns that actually does own a large amount of the crypto industry because that's the second biggest stablecoin in the world. Coinbase right now owns a minority stake already in Circle, and they already share revenue from USDT. So they want to control 100% of it. They are positioned as a favorable buyer because of that minority stake and also because of their revenue share they have with them. So hopefully Brad Garlinghouse and his genius can acquire Circle because that's really big news for XRP. If they're able to do this, there's a lot of things they can do with that platform. Now, right now, Circle is planning an IPO. And they had a target valuation that was given to them back from the IPO lawyers of $5 billion. So anything above $5 billion is a win for Circle. But just like any other business person, they're going to try to get it up as high as they possibly can, like anybody else would do. So anybody that's willing to pay over $5 billion, they're open to listen to them. So right now we got Coinbase and we got Ripple right now fighting for Circle. Acquiring Circle would grant Ripple control over their USDT. It will enhance their position in the stablecoin market, and it will also enhance their position as a cryptocurrency company and as a fintech company. Now, hopefully, if Ripple, this is the biggest thing people don't realize about this acquisition. If Ripple acquires Circle, this is the biggest thing I see coming. I think that Brad Garlinghouse and his team of geniuses are planning, if they're able to complete this acquisition, to merge the USDC stablecoin with the RLUSD project. Now, if they bring both of those together and absorb one coin to the other or match, for example, if you own USDT, we're going to match it with RLUSD or some other way that they can do it. There's a lot of ways you can do it. Some ways that have been done in the past. That's one way that's been done in the past. Create a separate chain. That's another way that's been done in the past. A fork. Or you could just give everybody RLUSD in their wallets. Because RLUSD is also, I believe USDC is on Ethereum. RLUSD can also be moved around on Ethereum. So maybe they can send RLUSD to your wallet if you hold USD, because they can see everybody that holds it, and then like retire the project or something like that to onboard a lot of users onto RLUSD at once. So it's a lot of ways they can do this. But regardless of whatever they do, if they leave them separate, bring them together, or some other hybrid situation, whatever they do will rapidly accelerate global adoption of all of Cripple's projects, including RLUSD and XRP. It gives XRP and Ripple as a company an instant foothold in the stablecoin space remember, they're already backed by a regulatory trust. They already got real world use. It's one of the only few cryptocurrencies in the world that actually has real world usage. Now, I like Bitcoin a lot. Bitcoin is one of my, of course, it's one of my biggest holdings. But to be honest, Ethereum and XRP both have more real world potential use than Bitcoin. Bitcoin is almost all speculatory. It's not being used for anything except for what people say it's gonna do. It's gonna do this, it's gonna be this, it's gonna be that. Which it probably will. It's nothing wrong with being able to predict the future and buying something early. It's called speculation. Speculation is not bad. It's just the ability, it's just seeing something, buying it into it, investing into it for its potential. And the potential is unsure. Any potential is unsure because we never know. Somebody can be a phenom at basketball or football, whatever, in their teens, and they break a leg, arm, break a hip, and it's over. So regardless of how much potential you have, you can't predict what's coming next. So it's still speculatory. It's speculation. It's a speculatory investment. So Bitcoin is still speculatory. We don't know what it's going to do. XRP is not as speculatory because it's already doing real world stuff. Moving value around, cross-border payments, some of this stuff. It's already being tested, not really live yet, but it is being tested in Japan. It's being integrated in Japan. We know that right now. And a lot of things are already happening. So that's XRP and Ethereum are less speculatory. So it's a lot less risk in either one of those. But Bitcoin has a lot of potential, a lot of momentum behind it. So it's not a lot of risk with that either, but it's less risk with Ethereum and XRP. So now talking about Ethereum has been the underdog in crypto for almost 2, maybe even 3 years. A lot of people, especially younger people, Solana's gonna beat it. Oh, Solana hype. You don't understand. Solana's faster, and we young people like Solana, which is nothing wrong with being young. I'm just joking, really. And then Bitcoin has been dominating the headlines. So Ethereum kind of been like the stepsister, pushed behind, people saying it's over, people saying it's dead, it's a dead project, these other ones are faster. But like we said on many shows before, that's a lack of understanding of how technology works. But now something unexpected is happening. All of a sudden, Ethereum is gaining a lot of strength. Really no major news, no hype driving it, nothing. It just went from 1,400 all the way up to 2,500, or 56% gain in a matter of weeks. And nothing's pushing it, which is a good sign. So if any news, any hype, or whatever's pushing it comes out, we're going to go back right to all-time highs, 46, 4,700, very, very rapidly. This may be the beginning of a silent but powerful shift in how money flows into crypto. Silently. Shorts get demolished. Short squeezes happen, all without any news. And then all of a sudden, a coin goes up 100, 150% out of nowhere before the masses come in the next phases. And I believe that's what's happening with Ethereum. I think before we get into that retail rush that comes in, Ethereum will already be back at all-time highs. It's already strengthening versus Bitcoin. There's no ETF buzz, no big news. All of it's just been organic. It's not even any hype behind it. Nobody going out talking about it. There's been no big conference of Ethereum. The conference was back in February. The biggest conference, Ethereum Denver, I believe it is. The only thing that I could see what could have possibly done this is there been some recent leadership changes. There's been a big Pectra upgrade. Now, that could be part of it, but the masses don't understand that anyway. The retail people don't understand that, so I don't think that's a driver. But I think the smart people, I don't want to say smart, but I want to say the people in the know, understand how, first of all, how difficult the Pectra upgrade was, and also how much it improves structure and how much it improves efficiency of Ethereum. And they now understand, which I understood all along, technology always starts out is expensive, buggy, and inefficient. Over time, it moves forward with upgrades and patches and new systems. And pretty soon it's to where it needs to be to reach mass adoption. All of this has boosted investor confidence significantly. Years and years of new coins and layer 2 still in all the spotlight. And all of a sudden, the Ethereum team did something which I believe was very, very smart. They stopped focusing so much on layer 2 solutions. Like ENS is layer 2, and I like ENS a lot, but they went back to the base layer, the original blockchain of Ethereum. And they said, we're going to start working on improving that first. We're going to go back to build our foundation. We're going to stop building it on sand, and we're going to build it on bedrock. It actually says that in the Bible. You build on bedrock and then you build up, then you don't have to worry about problems in the future. You build on sand, your house may look good on top, but the foundation is weak. The Ethereum team said, look, let's go back and we rebuild our foundation. That's what we got originally. We got all our attention. We got all of our adoption from. So let's move back to layer 1 scalability. Let's shift focus back to increasing efficiency, making transactions cheaper, and making it scalable for when we do build up and there's a mass adoption that comes into it, the foundation is strong. That itself boosted a lot of, especially people in the know in tech, in fintech, they saw it as a positive news along with the Pectra upgrade. They said, well, Ethereum team is doing the right things. That increases investor confidence. Now, a lot of people say, what's layer 1 and 2? Is it like a cake? Is it a sandwich? What is all this stuff they talk about? Well, it's pretty simple. Technology is built in layers, especially since the age of the internet. The internet itself is built in 7 layers. It always starts out as a base layer, and that's the base technology that moves around information. That's what we see with the network cables, when all the wires take our internet signals across the country. we have a network in the office. That's the base layer of the internet. That's the signals actually going through the wires. Now, those signals are just binary signals, zeros and ones. They go through the system. That's the base layer of the internet. That's the base layer of most computers is zeros and ones. Now, from that base layer, it used to be a time in computers, if you wanted to be a programmer, you had to program in machine code, which was one layer above binary. It was very difficult. It was a lot of math involved. And you had to you had to almost have a PhD in math to be able to be a software engineer. By the time I went to school in 2000, it was no longer like that. We was a few layers up. So I only had to do machine. You didn't have to know binary. Didn't have to know machine code. You didn't even have to know advanced languages. It was .NET, which was basically you just write in English what you wanted to do. And it would just take whatever you wrote in English, it would convert it down into the base layer, and then it would run. So everything that ran on the computer was in zeros and ones, but I never touched it because I was a few layers up, even as a software engineer. Now the users are up even higher. They're past that. They're like 4, 5, 6, 7 layers up. That's how that's how technology is built. Base layer, another layer. Pretty soon, when the users are accessing it from the top layer, they don't see any of that. All they see is an easy to use interface. It takes time to do that. Blockchains like Ethereum and Solana are the base layers of technology. That's the reason right now people look at these technologies and they say, nobody's going to use Ethereum. How are they going to use those long addresses? Nobody's going to understand how to use wallets. Nobody understands all of these things, nodes and nonces and all how it's sending coins back and forth and gas fees. That's very difficult to understand because we're at the base layer. It's a very new technology. It's very complex, hard to use, like the internet in the 80s. Now, if you used the internet in the 80s, I didn't, I was a kid, but you had to understand how to hook up a modem to a computer. They ain't come with a modem back then. You had to understand how to dial up from the command line. Dial up to the server, you had to put in there what you needed to connect to, and then connect the modem and press commands, 3 or 4 commands, and it would connect to the internet. And then you had to tell the modem to go onto the internet and find a raw IP address instead of the website. And you couldn't type in www.google.com back then. You had to type in the IP address. And you had to just know those by heart or have them written down somewhere. And then you had to download the text from the website and then understand how all that worked. It was in HTML didn't come out to the early 90s, so there was no markup. It was just text. And you had to understand how the text was formatted so that you understood it. They had different ways. It was a whole language they used in those news groups to send information back and forth. And you had to be able to read the text and just understand it like another language. Over time, it got simpler and simpler to use. And now we press google.com and we get a search engine. We don't have to remember IP addresses. We don't have to know how the modems work. We don't have to type in any commands. You don't have to dial in nothing because the modem's always connected. So now it's a lot easier. It's a lot more simple because we built above that base layer. Same thing's going to happen with cryptocurrency, Ethereum specifically. As we build up, people are not even going to know they're using Ethereum no more. They're just going to know values getting transferred back and forth, or that smart contracts are getting executed. They're not even going to know what the system is even using it. Like, we don't know what modem is in our computer. We don't know the brand. Every computer has a different brand of modem. Some Qualcomm or something else. We don't know what's in there. We just use it. Same thing. So think about Ethereum, like I said, as like the base layer of the internet. Years and years, upgrades in Ethereum, and this is one of the reasons I believe they fell behind too, is because one is people start looking at newer blockchains. Is two is that Ethereum was working on layer 2 solutions. They put a lot of their attention without fixing the foundation first. So Ethereum team is now went back to improving the main base foundation, the base itself, making the core network faster, smoother, and easier to use. And I think that's going to bring us back to all-time highs, and that's going to eventually, over this year, push us from 8 to 12,000, which I predicted back in 2023. So Ethereum is seeing major inflows, again, over 200 million last week, outpaced most altcoins and even rival. It got almost as much as Bitcoin got inflows. Shorts start closing out positions. Remember, there was a lot of shorts. Remember back in February and March, we talked about how a lot of institutions, small and mid-sized institutions, took out major shorts on Ethereum because they believed that it was over because of the rise of Solana and a lot of other things, and also the bit by bit hack that happened after that, which I don't know if that was related. I think it was, but that's a conspiracy I have. And so now a lot of those shorts had to close out their positions, which caused the price to go up even more. More shorts had to close. New capital started coming in. Ethereum right now could be finally set for a resurgence, which I believe it is. And it used to be a time when both Bitcoin and Ethereum set the pace for crypto, not just Bitcoin, but hopefully if Ethereum starts to rise like it used to all the way up to 2020, 21, 22, 21, I think, it will now be the barometer with Bitcoin of the entire market again. Remember, a lot of coins before Solana came out, Shiba is one, they're built on Ethereum. Some of the major coins that you guys use all the time, a lot of the stable coins are built on Ethereum. So if Ethereum does well, all these other coins do well. And all the other, and also Solana, because it's also a layer one blockchain. And every coin does well. If Ethereum gets back to being a barometer or the pace setter or of the entire market like it used to be. So tomorrow we do have the event in LA, but I want to talk about my private wealth building community, the Chestnut Checkers Group, the CNC. Join the CNC.com. If you're ready to stop playing small ball, it's time to join the group, the private wealth building community. Group has made real change in people's lives. We focus on strategy and results. Real people making smart investments. You get step-by-step courses, hot crypto and stock picks, powerful circle of investors, and exclusive access to live events that go way beyond just the surface level. 30 people in our group have become millionaires. Some started with less than $10,000, $97 to get in. There's a link in my bio, or you can go to jointhecnc.com, or you can DM me the word CNC on social media, on x.com or Instagram, and I'll respond with a link to the group. Also, we have the event tomorrow night in Los Angeles, May 22nd. We're going to unlock the biggest investments on the horizon, from crypto to real estate, robotics. We're going to focus on nuclear energy, quantum computing stocks. Every attendee will leave this event with life-changing insight and strategies to make a lot of money. You'll hear directly from real estate experts, visionary entrepreneurs who are ready to capitalize on what's coming next. And the event will end with a 45-minute to an hour lecture or masterclass from me, where I'll break down the most strategic investments I see for the next year. And I'll show you how to move and secure your financial future. Links the link right now is in the description, or you can DM me the word Los Angeles on any social media, and I'll send you the link immediately. So last thing I want to talk about is Amazon's big AI move. But before we do that, I have an interview with one of my good friends that's working on some very hot technology, a crypto that's coming out, Web3 crypto. Now, before we get into that, I want you guys to understand, back in 2020, 21, there was a big move for Web3 and Metaverse, right? A lot of people look back at that and they say, well, it failed. If you understand how the market cycles work, you understand, not market cycles, you know how adoption curve works. You have the early adopters, late adopters, then you have the laggards, and you're going on. But between the early adopters and the masses, we have what's called the chasm. The chasm is when technologies either succeed or fail. And in the chasm, the media forgets about it. The average person forgets about it because they see it as a failed technology because it did not immediately take off. Technologies rarely do that. And people feel like if something didn't take off immediately, people do that a lot with like athletes too. They come in the league, rookie year, they don't do well. Everybody's, that dude's over. Bronny James was one. People do this with a lot of situations, athletics, technology. If somebody doesn't immediately make an impact, they just say, it's over, that person's not going to do well, or their technology's not going to do well, and they write the person or the idea or concept off and move on. Everybody, most people, I should say, tend to do this. But Web3 and Metaverse is not going anywhere. We're just extraordinarily early. It may take 10, 20 years for us to see the full fruition of what everybody's working on today. That's why Mark Zuckerberg changed the company to Meta, because he knows what's coming. He has access to information that we don't have. Web3 is something that everybody was talking about. Nobody's talking about it anymore, but that's what's coming next. The first part of the internet, Web 1.0, was static websites. Web 2.0 was the rise of social media, MySpace, then Facebook, then Instagram, and TikTok, and all we have today. The third phase of the internet is Web 3, in which the control goes away, hopefully, from the masses into the hands of the people. So it's a coin coming out called Wonder. And I want to share with you guys. One of my good friends, I'm going to bring him on the show right now. And I want to share with you his insights on what's coming next for Web3, what's going on for Wonder, and how you can position yourself to do well. Yeah, I'm here with Kane Brennan, the head of Web3 and the CTO of a very, very exciting project that I've been watching here closely, the Wonder token. It's a native cryptocurrency powering Wonder, which is a decentralized social platform built for creators, governed by the community. It represents more than just a utility token. It's the foundation of a new Web3 based social ecosystem where people can own their own identities, earn rewards, and help shape the platform itself. Now, this is where social media is going into the future. Web3 is going to change. Remember what we talked about before is that Web 1 was static web pages. Web 2 was the emergence of social media, Instagram, Facebook, and all the other things that we love. Web 3 is the progression of that into where users can control their own content, their own platform, and their own future. So I'm very excited to talk with my friend Kane Brennan about this wonderful project. How are you doing today, Kane? Kane, sorry.
Good, thanks. No worries. Thank you very much for having me on. It's a bit of a privilege. I've followed you for quite a while, so to actually be on the channel is kind of surreal for me. So yeah.
Okay. I'm glad.
So yeah, thanks for having us on, man.
I appreciate you following me a lot, man. I really appreciate it. All the way from London, right? Were you from London?
Yeah, from London, England, yeah.
Yeah, I love London, man. So like I said, there's 3 places I would live other than Florida, and one of them is London. So I love London. I need to go back. I've been there like 3 or 4 years. But I want to make sure that the users get real value from our conversation. They don't want to know where I want to vacation. They want to know about Wonder Token, which is making a lot of waves in the cryptocurrency world. So for people that are just hearing about this, I want you to explain from the perspective of a CTO and also a Web3 expert what Wonder is and why it's being called the future of social media.
All right, cool. Well, look, Wonder itself is a new take on the social platforms that are there, right? It's all about being familiar but different. So in our case, we start with giving you the opportunity to own your identity, own your content, and own your data. And that is the complete opposite to where we are today in the social sphere. You said at the very beginning, right? Web 1 was about static pages. Web 2 was about engagement. Web 3 is about ownership, right? The social platforms grew faster than what we're all used to, okay, and what we could understand. So we got to a place with social media where actually we lost control and all of our data was out there. You think about the rise of e-commerce, you think about the rise of social media. Every day, instinctively, we buy things. Every day, we click, we scroll, we thumb scroll. And we don't really think about what's happening behind the wires there, right? We shouldn't have to. But what we do know is, and what's becoming more and more apparent today, is that we've been exploited over the years. We've had our data lost, we've had our data breached, we've had companies make enormous amounts of money off of that data, off of the back of the creators, off of the back of the community. And we've never won, right? We've never won. Even the creators that do earn money out of it, right? And there are a small percentage that have something that will, really turn into a real income for them. Everybody else is kind of vying to get to that small percentage, right? The journey there is very unrewarding, and you lose a lot on that journey. So we kind of looked at all of that, and when we first set out on this journey, Web3 wasn't even a thing for us. We just looked at tackling the toxicity in social media and the way that people are exploited, and because during the lockdown, we all went straight to social media, right? That's where everyone spent their time. And it just emerged into this kind of melting pot of disaster, really, right? COVID was an awful time for many people, but it was actually a boom time for those companies. They made a fortune off the back of us.
Yeah.
More and more people piled their money in for advertising. Who won? None of us. What did we get? Conspiracy theories. What did we get? A platform telling us that we should do this or we shouldn't do that.
Separation of people into 2 different political spectrum. I mean, almost polarizing people. So.
Yeah, exactly. And what happened was the platforms, the way that those platforms led that conversation. And that's not true freedom of speech, right? Social media is about being free to express yourself and not be controlled and not be censored. There are platforms that will allow you not to be censored, but their models, unfortunately, are all driven around selling your eyeballs. And that's the thing here. We're not doing that. What we've managed to do is build an entire revenue model that is all about creators and consumers earning along the way and sharing in the rewards of the platform. So we don't need to sell your eyeballs. Now, the other players can't do this in the market. The existing players, their stakeholder engagement, everything that they value on their bottom line comes from ad revenue, and it comes from making their feeds addictive, your time dwelling, and then exploiting that back. No one wins except for them. And that's a horrible experience. But the experience of being on social media, the dopamine hit, their engagement with our friends, which is becoming less and less because it's largely flooded with adverts now.
Yeah,
if you look at the ratio of ads to actual social experience, they're completely wrong. In fact, your content gets flooded in between